So Trump wants to take Greenland and Canada. He also wants to make Americans rich again. How? Well, his chosen weapons are tariffs. He claims tariffs will bring wealth back to the U.S.
The president does love tariffs. He said it's one of his favorite words of the English dictionary, and he believes in tariffs because they'll ultimately make America rich again. They're going to raise revenue. They're going to help us pay down our debt. Most importantly, they're going to bring American jobs here back home.
The tariffs are kicking in, but they're not making Americans rich. Instead, the wealth is pouring into China. That's right. Chinese stocks are reaping the gains of Trump's tariffs. Let me show you a list. Alibaba is up by almost 70% since January this year, 70%. Then we have Tencent, the maker of the WeChat app. A few years back, Tencent was a target of Chinese regulators. It faced a crackdown, but now Tencent shares are surging. Last month, Tencent co-founder Pony Ma briefly became China's richest man. His net worth crossed $56 billion. This was driven by gains in Tencent stocks. Of course, Alibaba and Tencent are among China's biggest companies, but they are not the only ones benefiting. This rally is lifting stocks across the board. Consider the Hang Seng Index. Several major Chinese companies are listed there. Since Trump's swearing in, this index has gone up by 17%. Chinese tech companies are up by 29%. Contrast this with the S&P 500. That's the index of the top 500 American companies. After Trump took over, the S&P 500 has fallen by 9%. That's a $4 trillion loss, all thanks to Donald Trump's tariffs and his repeated U-turns, which have made the U.S. markets quite volatile. In comparison, Chinese stocks are rising. They are nearing a 3-month high. And you could say that they were well positioned to gain. You see, in the last 5 years, Chinese markets have struggled. First, the pandemic triggered a stock market crash. Then there were repeated government crackdowns. And then China's economic slowdown dealt another blow. So many companies in China were trading at a discount, as much as 30% below the 2021 prices. You could get those stocks for cheap. And this drove investors towards them. They left markets in the US and in India. And we've been telling you about what's happening in India. In recent months, several foreign investors have sold their Indian equities. They took their money to China. They bought Chinese stocks for cheap. And it's hard to put a number to this, to quantify the shift. But investors have been talking about shifting their money to China. They're bullish on Chinese equities. This was the background. Then came Donald Trump with his erratic policies. He turbocharged the shift. These policies have made Chinese equities more attractive. This shift has hurt India, of course, but it's hurting American companies more. On Monday alone, US stocks lost $1.7 trillion in value. That was the loss in one day, $1.7 trillion, and it was triggered by President Donald Trump. He was asked about the possibility of recession in the US, and he refused to rule it out. He said the US faces a period of transition. Those were his words. And that sent the markets tumbling. A day later, Trump tried to reassure investors.
I don't see it at all. I think this country is going to boom. But as I said, I can do it the easy way or the hard way. The hard way to do it is exactly what I'm doing, but the results are going to be 20 times greater.
Mr. President, you asked...
And remember, Trump is always right. Right?
Mr. President, when you look at the market selling off, that didn't concern you? And
Nope,
where do you see it going?
doesn't concern me. I think some people are going to make great deals by buying stocks and bonds and all the things they're buying. I think we're going to have an economy that's a real economy, not a fake economy.
Just trust me. That's what Trump was trying to say here, but that's not enough to convince investors, even those who are Trump supporters. His trade war is making them bleed money. Again, I have a list. We have Bernard Arnault, who is the owner of LVMH. He has lost $5 billion. LVMH is the parent company of Louis Vuitton. It owns many other luxury labels, and this company has taken a hit. Then we have Mark Zuckerberg of Meta. His net worth too is down by $5 billion. Google co-founder Sergey Brin has lost $22 billion. Jeff Bezos of Amazon, $29 billion. And finally, we have Elon Musk, Donald Trump's favorite billionaire and Tesla founder. His net worth has plunged by $148 billion. That's the biggest loss on this list. Musk is the closest to Trump, and he has suffered the biggest loss. Together, these billionaires have lost over $200 billion. And guess what they have in common besides their wealth? They all attended Trump's presidential inauguration. Not as spectators, but as supporters. They were there to support President Trump, to show how close they were to this administration in the hope that this would boost their business. But it has boomeranged. As things stand, Trump's moves are making Chinese businesses great. They're boosting Chinese businesses and bleeding the Americans.
Firstpost brings you the Ideas Pod at the Recession Dialogue 2025, the largest gathering of global policymakers, thought leaders, and innovators, now on the fastest growing international news platform. Big ideas, big debates, big impact. Only at the Ideas Pod.
Recession Hill.
Firstpost gives you front row access to the conversations that matter most.
Also have
The Ideas Pod. Recession Dialogue 2025 on Firstpost. From March 17th to March 19th.